India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a big day. It's a big week, and I think we all know why. Exit poll results over the weekend mean that we're going to start, according to the GIFT Nifty, with a 3% pop. We're coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi here, and Nigel is joining in from the Bank of America conference. Guys, good morning.
Good morning, everyone. Hi. Nigel, what's the mood out there?
I don't think there could be a... should be yet to get to the mood out here, but obviously, we're bracing for one of the biggest days. Cues over the weekend have been good, whether it was the US markets, whether it was the exit polls, and the OPEC as well, pretty well behaved. So it's going to be a big day. Let's kickstart with the action right away, Prashant.
Absolutely. And, it's one of those days which I think we will remember, right? And we will talk about maybe 3 years, 4 years, 5 years later as well, and say, well, this is what happened after the 2024 elections, at least after the exit poll results. So let's just sort of, begin by telling you what you need to know. And I'm going to, we'll talk about the GDP numbers, which I think add a little bit of icing to the top, or we'll talk about other things, other factors as well. But I think I'll just focus exclusively on what is the big story, which is, of course, elections, right? So get ready for a big rally. I think that's pretty clear. And you got the GIFT Nifty, as I said, indicating a 650 odd point higher start. Exit polls predicting a decisive, that's the GIFT Nifty for you, 800 points now. On Saturday night, while the exit polls were on, I was thinking, well, new all-time highs, and then we'll sort of pick up from there. But this is, of course, going to be a meaningfully higher high as far as the sort of Nifty is concerned. So exit polls predicting a decisive victory for the BJP. That is point number one. BJP, according to these exit polls, poised to win 325 seats. NDA poised to win 360 to 400 seats, which means that both these tallies are significant improvements over what they did in 2019. And this is incredible. For the third term, the BJP and PM Modi looking to better, perhaps, when the results come out, the best ever tally in terms of the general elections. This is a significant positive surprise relative to market expectations. This is important, because, the Satta Bazaar in that sense was at about 305 for the BJP. The last we checked was Thursday evening, Friday morning. So in that sense, it's not a surprise that the BJP is coming, but I think the extent of the victory perhaps is a surprise. Having said that, talking about what the Satta Bazaar, etc. were talking about already, I think there was some skepticism. People were waiting, people were holding back, thinking, let the results actually come through, and then we will try and go in. So Nifty perhaps makes a new all-time high in all likelihood. The earlier one was 23,110. Expect a serious short covering from FIIs. They went short even more from last week Tuesday when they were long 47,000 contracts. They ended last week, which is Friday, with 3.2 lakh net contracts short on the index future. So a lot of this will cover. Now, actual results are, of course, tomorrow, and we will see what happens there. But I would say that, the immediate election pop, about 70-80% of it may actually come through today itself. And then we will, of course, see the extent of the divergence in exit polls relative to what the actual, what the exit polls we know as of now. Remember, both in 2019 and 2014, and actually in 2009 as well, last three general elections, exit polls got the direction right, but they underestimated the scale of the victory. So it's actually entirely possible that going by that sort of historical data, the actual numbers are even better for the BJP and for the NDA. Okay, so, as I said, broad move, broad rally. Expect sharp moves in public sector stocks. If you're looking at what to do, I think you basically should remember that what has done well so far, which is essentially all of it, which has been doing well because of the tailwind of government support, government expenditure, which is, of course, PSUs rank really up on the top. Adani Group stocks, which are politically sensitive, they had a rally going into this. But of course, I think they are set for a bit of a re-rating, and of course, few financials as well. So, this is broadly the bunch. And of course, manufacturing, PLI. I mean, essentially look for stuff which is already done well, where there is confidence that there is political continuity. So there will be sort of rich dividends in that sense. A rupee, a dollar INR, spot should move sharply higher. I think it should go up to about 83 to 83.2. But beyond that, perhaps I don't think we are expecting a move, because, I mean, the RBI will not want very sharp sort of rate volatility to start to seep through. This would, I mean, just to sort of wrap this up, just the scale of it is quite important, because this is the first time since 1962 that a sitting Prime Minister gets re-elected for a third term. As I said, expect a significant policy continuity dividend. A mandate of this size, and we'll talk more about this over the next couple of weeks, etc. A mandate of this size makes most economic elements of the BJP's election manifesto doable in a very imminent, immediate kind of fashion. So I think this is where this is the slightly longer term, beyond here and now, beyond what happens today, and of course tomorrow as well. Surbhi.
Prashant, I say that the markets today are going to get a 5 ka punch. And I'll tell you why the 5 ka punch. The first big punch, obviously, is the exit poll result.
Yeah.
Second, third, and fourth are very strong data prints from India, from the US in terms of core PCE, and from China this morning.
Yeah.
So those are the three data points. And the fifth part of that punch is the short covering that we're all talking about, plus the cash market buying that started. Now, first of all, the global cues are very, very positive. We had Wall Street doing really well, the Dow and the S&P. The Nasdaq was, a little iffy. But more importantly, yields also cooled off once that PCE number came in, because that inflation number for the US is more or less on track. The core numbers were bang in line with the estimates for April, 0.2%. So what that did was it cooled off the yields as well. The last I checked, the US 10-year, even right now on our screens, it's still below the 4.5% handle. Remember, earlier in the week, last week, we were talking about 4.6 back on the screen, but that's changed now, back to sub 4.5%. So that's good news. In terms of other global data points that are important to look at, the Caixin numbers that have come out of China. Pull up the Hang Seng index. Before we talk about the India GDP, just to complete the global picture, pull up the Hang Seng. It's shooting away the mainland Chinese market as well as the Hong Kong markets because of the Caixin manufacturing print that's come in, which is at a 2-year high, which is above the estimates, which is, of course, better than the previous print. So that manufacturing PMI, the private sector survey, is looking very good. So global markets are giving you a further edge up across Asia as well, not just Wall Street. Now come to our GDP print, which was blowing past expectations as well. Whether you're looking at Q4, whether you're looking at FY24, those numbers were just fantastic. 7.8% was the actual. Our own poll was at 6.7%. Of course, it's a decisive sort of improvement over the same period last year. Come to FY24 numbers. You've got 8.2% on the screen. Anything above 8% anyway, optically, sentimentally looks extremely good. The FY24 number as well, there we go, 8.2%. So GDP numbers looking absolutely phenomenal. Now coming to the, fund activity. On Friday itself, there was some cash market buying happening at the FII desk. So about 1,600 crores. DIIs have anyway been buyers. And that's the big question. Whether we will start to see more big numbers now on that FPI part of the screen, Nigel. But as I call it, it's a 5 ka punch this Monday morning.
Well, I like the way you put it, Surbhi. And since there's a lot of talk on the FI positioning, let's run you through not just the index futures, how they positioned on stock futures as well as the cash market. So first up, getting into the event, they added shots yet again, and that's something that they have been doing. So they added close to 3 shots for every 1 long position. 30,000 short contracts were added. And that's why the long positioning is holding at around that 14% odd. Now, how did the participants position for this event on index futures itself? So the FIs, yes, we've been talking about them being net short on the index, right? But take a look at the clients. That's large HNIs, retail audience here as well. They have normally got it right. And they are, combating this FI net short position with almost an equivalent amount of net long positioning. So that's just one point on the table. How the clients position though, both on the index as well as on stock futures, the long positioning is the highest we have seen in multiple months. So they have gone into this event net long on the markets. But coming back to the FI positioning then, yes, they're net short on index futures, and we've been making this point for quite a bit. But if you take a look at what they've done on stock futures, actually the net long positions are the highest we have seen in multiple months. So they've actually added longs on stock futures, telling you there's a bit of a hedge that's playing out here. On the index futures, yes, we'll see a bit of a short covering bounce that will play out, but it appears on select stocks as well, there is some long positioning that's added. And the key point that I'm going to be tracking from here on is the cash market selling. You know, in 2014, 2019, getting into the election verdict, if you take a look at the flows between January to May, you'll see that the FIs actually were buyers. Yes, plenty has changed, but this time around, getting into the event, actually the FIs are sellers. So it could be a global phenomena. Yes, it could be with regard to the emerging market outflows as well. But this big FI net sell number, if that could turn around, if they were waiting to get this event out of the way, then, you know, that's what's going to propel this market higher. So the short positioning that the FIs have on index futures and the turnaround in terms of selling to buying, that's what's going to help the Nifty move up. So I'm going to track this data point very, very closely. On the levels that we're tracking, well, as you all mentioned, the fresh all-time highs is around 23,111 approximately. So we'll have to keep an eye out on that mark. And the 20 and the 50 DMA, they've been crucial support zones. So around 22,400, that's a line in the sand on the downside. The Nifty bank, that has to get to 50,000 odd. And since the FIs, if they're going to be looking to come back, a lot of large private sector banks out there could find some favor. So the Nifty bank actually will be the one that will propel the Nifty higher from here on. I don't know whether risk reward works on the Nifty, 800 points higher in today's trading session, but the Nifty bank is the one to track. If that can hold on to 50,000 odd, that's going to be the big one. And as I mentioned earlier, the FI buying in the cash market has to return. If that's the case, you know, then we're going to see some big support coming in from them. Back to you guys in the studio.
All right, Nigel, thanks very much. Coming back to you in just a bit. So let's kick it off. We've got lots of calls coming in on equities. Mahesh Nandurkar of Jefferies says that exit polls indicate 305 to 350 seats for the BJP and another 50 to 65 seats for the partners, comfortably above the simple majority mark of 272. He says while a repeat win for Prime Minister Modi was a consensus, these numbers are higher than expectations. He says if the actual results on June 4 mirror this, it would be a sentiment positive, especially for capex stocks. However, given the already strong domestic positioning, small and mid caps could take a near-term breather after the election rally.
Okay, well, Venugopal Garre of Bernstein says that we called for investing into election results as we anticipated a continuity of power. He says, given that the exit poll trends translate into results on Tuesday, a continuation of the relief rally can happen with the market touching 23,500 briefly before profit booking takes over. He adds a greater margin of victory with seats going into the 380 to 390 or above range can increase the magnitude but not the duration of this move.
Let's get you some money market views as well. B. Prasanna of ICICI Bank says the outcome of general elections will dominate both sentiment and flows in the currency market in the coming week. He says if the final outcome is consistent with exit poll results, which is their base case, they're expecting the rupee to appreciate to 82.75 to the dollar, with a range of 82.75 to 83.25 in the coming week. However, he says in case of a negative surprise in the electoral outcome, the rupee will be under sharp depreciation pressure. He expects the RBI to prevent sharp moves on either side.
On bonds, we've got B. Prasanna who says that US yields soften owing to inline economic data and positive demand-supply scenario. He says local yields, however, remain range-bound going into general election results and the RBI policy due this week. He adds S&P's revision of India's outlook to positive and declining oil prices had limited impact given risk adjustment ahead of key events. He says with exit polls predicting return of incumbent government with higher majority and expectations of fiscal prudence to continue, he expects markets to trade with a positive bias and the 10-year benchmark bond yield to trade between 6.9 to 7%.
Okay, all right. So those are some views coming in both on the equity as well as the money markets.